Welcome to Balance of Economy. Before we dive into the data, please note that this is market research for educational and informational purposes only and does not constitute financial advice or a recommendation to buy or sell any asset. Let's look at the numbers.
All right, let's get right into it. For almost 2 months now, the crypto market has been in this state of compression. It's not exactly crashing, but it's not breaking out either. Instead, it feels like it's coiling up like a spring, just building tension between two very clear boundaries. And that usually means a big, decisive move is coming.
So what is the data actually telling us about this crossroads? Let's take a quick snapshot of the key metrics that are really defining this period of, market consolidation.
What's pretty remarkable is just how clearly defined this trading range has become. We have seen major support holding strong right around that $60,000 level, while any move to the upside has been capped by some pretty significant resistance near $72,000. For weeks, the price has just been bouncing back and forth between these two walls.
Now, the consequence of all this sideways action is actually pretty significant. See, what happens is that these massive pools of liquidity, basically huge clusters of buy and sell orders, they build up just above that resistance and just below that support. And markets, they tend to move towards that liquidity like a magnet. This strongly suggests a powerful break from this range is on its way. The big question, of course, is which direction?
So first, let's explore the bear case. Let's put on our skeptical hats. There are several data points and technical indicators out there suggesting that the path of least resistance could be downwards. Let's break down these technical headwinds.
Okay, on the technical front, analysts are pointing to a bearish divergence on the weekly chart. Now, that's when the price makes a higher high, but the momentum indicators are making a lower high, which often signals a potential reversal. We've also got a confirmed descending channel that's kind of trapping the price action. And if you look at the fund flows, the spot Bitcoin ETFs have seen these sustained periods of net outflows, which suggests a bit of institutional caution.
And look, this isn't just some abstract analysis. These technical chart patterns come with specific, calculated price targets. If that $60,000 support level fails, analysts have already laid out a potential roadmap with downside targets at $52,000 and maybe even as low as $45,000.
Now, adding to this bear case is a more macro, cycle-based argument. Some of the long-term analysts out there believe this cycle hasn't seen a true capitulation event yet. That final, painful flush-out of panicked sellers that has historically marked the bottom of major corrections right before the next big move up. But of course, that's only one side of the story. On the other hand, you have a really powerful bull case being built. And this one isn't based on short-term technicals, but on long-term, structural tailwinds that are fundamentally changing this market.
Now, this is fascinating. If you look at the historical data from the 4-year cycle, the greatest returns have not come from buying at all-time highs, not even close. The truly life-changing multiples, we're talking 21x, 8x returns, they've been generated by accumulating during these periods of fear and consolidation, what some would call the bear market. It kind of puts these downturns in a completely different light, doesn't it?
And then you look ahead, the structural changes are massive. We're witnessing the institutionalization of crypto. We're on the cusp of a huge expansion of accessibility through 401k retirement plans. And behind the scenes, you had the explosive growth of stablecoin infrastructure, which is quietly becoming a major global payment system. These aren't just cyclical trends. These are fundamental shifts in the landscape.
And this quote here from ARK Invest's Kathy Wood really just hits the nail on the head. This is all about Bitcoin maturing into a recognized asset class. It's one that institutional investors are looking at specifically for its low correlation to traditional stocks and bonds, which makes it a really key part of modern diversification strategies.
And underpinning this entire long-term perspective is Bitcoin's 4-year cycle, which is tied to its halving event. Historically, this programmatic reduction in new supply has kicked off a very predictable pattern, a major bull market, a significant correction, and then a period of accumulation before the whole thing starts over. Many believe we are simply following the same well-worn path.
So you've got a compelling case for the bulls and a compelling case for the bears. The market is truly at a crossroads. So let's try to synthesize all of this and identify the key signals that will likely tell us which path the market is about to take.
So what should you be watching? Well, we're monitoring 4 key signals. First, the direction of those ETF flows. Are institutions buying this dip, or are they continuing to sell? Second, a definitive break of those technical levels we've been talking about, either above 72K or below 60K. Third, the market's correlation to U.S. equities. And finally, any major institutional adoption news, like the official rollout of 401k access.
And all of this leaves us with the central question that really encapsulates this entire situation. Is this price action just a healthy shakeout, something designed to get rid of the weak hands before the next major leg higher? Or are we witnessing a more fundamental break in the market's structure? The signals we just outlined will very likely provide the answer.